Hey, what's going on, guys? Gonna give it a couple minutes and then we'll go ahead and get started. Let me know how you guys can see my screen, if you can see it okay. Hey, what's going on, Vic? What's going on, Disciple, Mista? Good to see you guys. It's gonna be a good stream. Let me know if you guys can see the PowerPoint screen okay, the full screen of it. If so, I'll keep it where it's at. What's going on, Snifted? Good to see you here. It's gonna be a good stream for 2026, guys. Gonna go over a lot of good stuff. What's going on, Peaky Blinders? Good to see you here. I figure while everyone is off for the holidays, we can get some good streams going, especially getting into 2026. So there's gonna be a lot of good stuff to talk about. Awesome, appreciate that. Is it Shago Fatso? Appreciate that. Cashflow Genius, yeah, we can see it. Awesome, perfect, guys. Perfect. Yeah, this coming year is gonna be amazing, guys. There's gonna be a lot of stuff coming down the pipeline. I'm gonna cover a lot of stuff here, like I said, for the PowerPoint that I have created. Gonna be a lot of good data we're gonna cover, and so definitely stay tuned for that. Gonna give it another 30 seconds, let everyone else get in here, and then we'll go ahead and get started. Also, guys, if you haven't, if you could like the stream, that'd be awesome. It's gonna help spread it to the masses so we can get even more people in here, spread the good news to everyone, and then afterwards we can talk about a lot of good things that I'm expecting for the new year. So with that said, let's go ahead and get started. So how to trade crypto in 2026. Well, first, we need to talk about what changed in 2021 to 2024 and how this year has been different and how next year is going to be different. Well, as you know, institutions now control most of the liquidity. So there's been a lot of attention on ETF flows. There's been a lot of attention on banks and institutions, even partnering with various crypto companies. And so you've seen Coinbase have a lot of partnerships, and even Polymarket, they had a lot of partnerships as well this year, the prediction market platform, right? And so we're seeing this fusion between Web 2 and Web 3 and this adoption from Web 2 into Web 3, where now there's a lot more money flowing in. But with that money comes increased AI trading, which also comes increased fake outs. And so in the TradFi space, you have a lot of HFTs, high frequency trading algorithms. And now we're seeing that more in crypto, more so than ever, where you have millions and billions of dollars into the market, but at the same time, they're trading quick. They're getting in and out. So that's why you have a lot of these quick moves where Bitcoin will pump to 90K and then retrace all the way down to 87K. At the same time, you can use that to your advantage, but just be cognizant that that is something that's going to continue for the new year. So retail edge is going to require discipline, not hype. So I know a lot of you guys love to FOMO in, love to try to get the next big token, try to nail that next 100x. But I'm telling you guys, that's not going to be the way you make money in 2026. It's going to be through discipline, and it's going to be through being patient. And we'll talk about all that and all of the things that I'm expecting for 2026 as well. Austin, good to see you here. Eric Gomez, good to see you. Tenistic Productions, good to see you as well. Again, guys, if you haven't liked the stream, please like it. It's going to help spread this to the masses, get a lot more people in here. Now, let's talk about 2026 market structure. So we know that Bitcoin leads liquidity cycles. What does that mean? It means that whenever Bitcoin pumps, usually it brings everything along with it, and vice versa. When it dumps, altcoins dump more, and there's a lot of red in the market. So what that means for you is you need to rotate in and out of altcoins much quicker. And we saw that this year because there's thousands of altcoins being created every day through Pump Fund, 4.meme, and all these different launch pads, that it's hard to maintain focused on one token. Now, yes, there's outliers, like some of the meme coins like the White Whale, Flying Ketamine Horse, and a few others have gained a lot of traction. But at the same time, most meme coins and altcoins, anytime they have a pump, usually the dump is not far behind. And so with that said, meme coins are momentum instruments. not investments. And so anytime you invest into anything, guys, especially going into next year, do not get married to your bags. I don't care how bullish we are. You take profits along the way, because at the end of the day, it's not about how much you make. It's about how much you keep. You can make the best trades in the world, but if you don't keep those profits, what good is it, right? And so we're going to talk a lot about that as well. Journaling, managing your emotions, etc. But the big takeaway with this slide is, one, focusing on Bitcoin, but also rotating quickly in and out of tokens. Eric Gomez says 2026 consolidation year in my opinion. Basta says, Gran Luke, saludos de Argentina, Papa de Banco a muerte. Gracias, Bastate. Now, I am not Luke. I am John Luke, so a different person. I speak a little Spanish, but nowhere near as fluent as he is. But I thank you for that. So again, the only objective, capital preservation, your number one job is going to be survival. Okay? Now, what do I mean survival? I mean, just like it says, right? It's not about how much you make, it's about how much you keep. So missed trades don't matter. Blown accounts do. So I'll tell you this, guys. There's going to be tens, if not hundreds of opportunities every single day. Just because you missed one, it's not the end of the world. You're going to miss trades. This year alone, I probably missed 50 to 100 trades, whether that's big opportunities, whether that's good setups. Because again, I couldn't look at everything all the time. But the trades I did take paid off because I was patient. And patience is a virtue for a reason, because not a lot of people have it. Sometimes the best trade is no trade at all, so you need to wait for those perfect setups so that you can then take the best trade that gives you the best risk reward, and then you can make the most money over time. Because if you revenge trade, if you try to trade high leverage, if you FOMO in, you're going to blow up your account. I promise you. I guarantee you, probably everyone here has blown up their account at least once or twice. I'm willing to bet that. And that's fine, because it's a learning process. It's a rite of passage, as they say. Blowing up an account is just the way it is. But you learn from it. Because if you don't learn from your mistakes, then you'll be doomed to repeat them. And so professional traders think in probabilities, right? Even the best traders in the world, they lose 3 out of 10 times. Boo-hoo. It happens. But they learn from their mistakes. They're playing a game of probabilities. They know statistically they're not going to win 100% of the time. But if they win 70% of the time, 65% of the time, that's more than enough, guys. Especially if you're winning big and losing small. And we'll talk about that as well. So, risk management rules. Focus on risking only 0.5 to 2% trade max. Never risk more than 5% per day. Now, I see people risking, let's say, 50% of their portfolio in one trade, or even 100% of their portfolio in one trade. Guys, that's not the way to do it. You're going to blow up your account. And more so than even that is you're going to become emotionally involved. What do I mean by that? Well, say you have $1,000 in your account and you put that whole $1,000 into one trade. Well, say the trade's not going your way and you're down 20%. So you're down $200. That's going to affect you a lot more than if you would only put in 5% and say put in $50, and then 20% down means you're down only $10 instead of $200. You see what I'm saying? You see that mindset shift where, oh, if I'm only down $10, fine, I can let it ride. I'll let it hit my stop loss if I need to. You know what I mean? It's much easier to manage your risk and your emotions when you're betting with a smaller percentage of your portfolio. And a big thing here is defining your stop loss before entry. So before we take any trades, and when I post the leverage alpha trades as well, I always post the entry, I always post the take profit levels, and I always post a stop loss along with a thesis. You need to have all 4 of those before you even think about entering a trade. Because as they say, if you fail to prepare, then you prepare to fail. So if you just get on a trade on a whim because you FOMO in, more times than not, you're going to be used as exit liquidity, and the trade's going to reverse within probably 30 minutes. Because at the end of the day, if you're not acting on the data, then you're acting on emotion. And that's the quickest way to lose money. And so look at the chart. Look at where your entry is going to be. Place limit orders if you have to. Look at where your stop loss or invalidation level is. Look at where your multiple take profits are. Because remember, like we said in the beginning, taking profits along the way is paramount because the market's very rotation heavy. And then at the same time, have a proper thesis. Why are you taking the trade there? Well, because my RSI is oversold. It's at the 200 EMA on the daily. There's a lot of bullish macro catalysts coming up. I know people are going to try to front run those. And so if we do have one last dip, it's going to be good risk reward wise because it's bounced a lot of times in the past, right? Like, you see what I'm saying? Just multiple confluence signals that you can use to take that trade. Now your position sizing. So size based on invalidation, not conviction. What do I mean by this? Well, let's go ahead and do a little test here. And I want to see who gets this right. Say we're taking a long on Bitcoin at 100K. And say our stop loss is at 96K. So it's 4% away. If I only want to lose 20% for my trade, if I'm willing to lose up to 20%, then what does my leverage need to be if my stop loss is 4% away? Who can answer that? What does my leverage need to be if my stop loss is 4% away and I only want to lose 20% in that trade? There you go. Tazuli said it, 5x. Because 4% away for a stop loss times 5x leverage is 20%. So the max leverage you should go is 5x. Awesome, guys. Awesome. Got a lot of smart people in here. So again, it's not rocket science, but the quicker you can do that math, the quicker you can calculate, okay, my stop loss is 2% away. I'm willing to lose 15%. So the max leverage I'm going to do is 7.5% or 7.5x. Okay. Because 2% times 7.5x is 15%. So being able to do that math makes it much easier for you to dictate your leverage. So it's not like, okay, I'm always going to use 10x leverage, or I'm always going to use 5x leverage. No, it depends on your invalidation level. And so whatever you're willing to lose, if that's only 10%, then if your stop loss is 2% away and you're only willing to lose 10%, then okay, 5x leverage is the max, right? So you can see how that works. And same to if you're willing to lose 30% and your stop loss is 2% away, well, then you can go 15x. And so just gauge it based on your invalidation and how much you're willing to lose. Spot versus perpetual futures. So spot, long-term conviction, and scaling. So spot, again, like it says, it's for long-term conviction. Bitcoin, Ethereum, Solana, maybe Hyperliquid, maybe Monero, Zcash. These privacy narratives are getting big again, right? These are your long-term conviction bags. Perps are short-term. Don't hold your perp trade for months on end. Yes, you can hold it for maybe 1 month, but any longer than that, obviously you're paying funding fees. But at the same time, the way the market is, we could chop for a while. Okay. So for example, say you longed Bitcoin at $90,000 and you're still holding it. And that thing's been down to 86K, 80K, back up to above 90 and back down. Like, get in and get out of these trades and have invalidation levels. So for example, say Bitcoin right now is at $88,000, okay? My first take profit level isn't going to be at 100,000. My first take profit level will probably be 90, 91,000. And then my next take profit will be around 93.8K. Then my last TP will probably be near 96K. You see what I'm saying? So in this market that's rotation heavy, you need to take profits accordingly because we've had so much chop, we've had so much volatility. Any pump that happens gets sold off into. Yes, we could still have a major pump. It's possible. But guys, you're focused on risk reward and you're focused on taking profits quickly, not holding, because we're not in a holder's market anymore. It may have been like that last cycle, but it's not like that this cycle. And moving forward into 2026, let's just say, let's have a thought experiment here. Let's just say we are starting a bear market right now, and we've started it since October, and that was the top. Well, are you going to look for Bitcoin to reach all-time highs, or are you going to take profits on any small pump? You see what I'm saying? You need to shift your mindset. Because yes, could we still be in a bull market? Technically. Based off the 4-year cycle, though, we're in a bear market now. And so if that is the case, well, you're not going to hold until 125K. You're going to take profits along the way. 93K, 95K, 97K. If we break 100K, awesome. Cool. I'll shift my profit targets after that. Or I'll look for another entry. But I'm playing it level by level. And that's how you should play it as well. Level by level. Because there's no longer huge pumps and it just keeps going to Valhalla. It's literally, okay, we pump 5%. We pump maybe 10%. I mean, that's a lot. But say we pump that, usually we have a retracement of 5% or more. And so taking profits along the way is going to ensure that you're playing the long game and not trying to make that quick 50% move in a couple days or in a month. So again, shift in mindset. It's going to help with your profitability. Now, trading leverage in 2026. So we just talked about it a little bit. We'll dive a little deeper. Leverage is going to be a tool. It's not a weapon. And so 2 to 5x is going to beat 20x gambling. And I'll say that again. 2 to 5x is going to beat 20x gambling. So a lot of you, I'm sure, trade 20x, 30x, 50x, 100x. I've seen it everywhere. Everyone always posts their P&Ls. But let me tell you why that's going to get you in trouble. Because say you make a 50x trade, or heck, let's even say 30x. Okay, say you make a 30x trade and you win a couple times. Well, you're probably going to get overconfident. You're probably going to think you have a system going, and then you're going to bet a little more. Then you're going to bet a little more. And then if the trade's not going your way, you're probably going to let it, give it room to breathe. And you're going to say, no, I'm still going to win. It's still going to play out. And then it just keeps going down more and more and more. And then before you know it, you blow up your account. Because having 30x leverage, or heck, even 20x leverage, 20x only gives you a 5x stop loss before your account's blown up. Or 5x move, I should say, not even stop loss. So when you have 20x leverage, your stop loss needs to be tight. I'm talking 1%, 1.5%. Whereas if you're trading 2 to 5x, your stop loss can be 4% away, even 5% or 6% away. You see what I'm saying? So having a lower leverage is going to allow your stop loss to breathe, give you the price room to be volatile, because the price is very volatile these past few months. Very, very volatile. So the wider your stop loss can be, the more chance you have to be profitable if all your indicators are in confluence. And again, it's just consolidating before eventually going higher. So most pros use leverage for efficiency, not YOLOs. Again, it's all based off calculation, focusing on the data, not emotions. Looking at the chat. What's going on, Mirza? Good to see you here. Expecting a explosive move in the next 1 to 2 weeks, he thinks. Yeah, I'm thinking potentially we may have one more down move beginning of January, and then we rip after that. Snifted, do you think people should trade 100x or 150x? Too risky. Nope, definitely too risky. And actually, yeah, what I just mentioned there. Because again, your stop loss, at 100x leverage, a 1% move and you're liquidated. Like you have a very narrow space, very narrow room for error when you're trading that high leverage. Cashflow genius, all right, that's true. Snifted says people hold because they're too scared. Most of them want to play super safe. Exactly, right? Because here's the thing. So you can definitely have those long-term bags. And what I mentioned is, yeah, it's good to have, long-term bags like Bitcoin, Ethereum, Solana, etc. But if you're trading leverage, then you need to be very, very careful. Very, very careful, because the market's very volatile. There's quick moves to the upside and the downside, especially around major, let's say, meetings. So the FOMC meeting, where there's interest rate decisions, it's very volatile. Anytime Trump is having a big speech, it's volatile, right? And so you need to make sure that you're calculating for those volatile times and lowering that leverage accordingly. So narrative rotation in trading. So capital rotates by attention and liquidity, okay? As Luke always says, where attention goes, money flows. And so you're going to have various narratives like AI, RWA, real world assets, infrastructure, memes, etc. So those usually dominate cycles. Now, recently, what I mentioned, we've had newer narratives like privacy with Monero and Zcash. Those have been outperforming. We've also had prediction markets like Polymarket, Kalshi, etc. So you can expect more prediction market platforms to come on the scene. And with that said, they're probably going to have tokens as well. So that's going to be a big narrative, right? And so the thing is, you're focused on trading rotations, not beliefs. For example, you could think the gaming sector is going to take the world by storm because GTA 6 is releasing in November now. Well, how long have we been waiting for GTA 6 to release? Literally, Trump launched a meme coin before GTA 6 released, right? Like, how long are you going to wait for that gaming narrative to play out? So don't play your beliefs, play the rotations. If the privacy narrative is big right now, then trade privacy tokens. If the prediction market narrative is big right now, trade prediction market tokens. If revenue generating protocols are big right now, like Hyperliquid, trade revenue generating protocol tokens. You see what I mean? Like, follow where the attention goes. If it's for memes, it's going to be risky, right? Look for those memes that have strong communities, have actually a strong community, and have strong narratives that you can get behind and have gained a lot of traction on TikTok or others, right? So there's always a method to the madness, as they say. And so you need to be able to capture those narratives accordingly. Just like with AI, when in 2022, when ChatGPT came out, AI got really big. RWA, when BlackRock started talking about tokenization, that got really big, right? So you have these little pockets of attention that you can capture. Mirza says, Bollinger Band's getting tighter. Yeah, probably down to 74K and then up only. Yeah, big level there. I know a lot of people looking at 74K. Shigo Fatso says, how would you trade with a $50 portfolio? For myself, it just depends how bad you need that money. But I would still trade low leverage. I'd probably trade at the upper end of the low leverage. So I'm saying maybe 10x. But I would be very, very diligent in how I'm getting my entries. And so, again, I'm waiting for confluence at major support. The RSI is oversold. And potentially, we're in that fear level for the fear and greed index. Maybe there's a lot of liquidations for longs and now a bottom is near. Like I'm looking for a lot of catalyst basically when I'm making those trades, because probably I'm going to risk a little bit more of my portfolio than just 5% on a $50 portfolio. I'm probably going to risk maybe closer to 20%. You see what I'm saying? So I'm going to raise the amount I bet, and I'm going to raise the leverage just a tad. But look for those tier 1 setups. There's a CT KOL narrative catching attention in the trenches right now. There's opportunities. Exactly. A lot of opportunities, guys. So next, liquidity is the real indicator here. So in my weekly market overviews, how many times do you guys see when I'm looking at the liquidity heat map? Because market makers will make money based off of the liquidity, based off liquidations. And so price is going to gravitate towards those liquidity pools. What does this mean? It means that we could have a liquidity heat. Let's just say, okay, Bitcoin's at 88K. So there's some liquidity right now near 86K and then some near 92, 93. So what that means is if price goes down, more times than not, it's going to reach those liquidity levels that are lower. So around 86K, it's going to have a sweep, right? So smart money is going to hunt those stops because people potentially have their stops below major support levels. That's why I say give your trade room to breathe. Don't place it just below a major support level. Place it maybe a couple percent below that. But nonetheless, when we reach those liquidity levels, usually we go a little bit below and then we reverse to the upside. So they're treated as mean reversion levels. And so that's why I always say, look at liquidity, look at the 24-hour liquidations, because usually when we have a lot of long liquidated, like 700 million plus, usually, and then we have, a billion total liquidations, usually that means a bottom is near within 1 to 3 days. And so liquidity is the real indicator here because it dictates where the market makers want to move price, and as well as the sentiment and how many people have been liquidated on both sides. No problem, Shegofatso. Cashflow Genius, hey Data, do you think gold will go up a little? I think it's possible gold goes up to 5,000 and silver probably $100. Yeah, I think it's very possible. I think that, again, the reason gold and silver and palladium and platinum have gone up is because there's a lack of trust in the US dollar, a lack of confidence in the US dollar, which you could see it as good or bad, depending. I think that's going to cause a lot of adoption in crypto. A lot of people cause them to move towards crypto. So that's one positive of precious metals rising. But at the same time, it could mean we could have, US dollar collapse. Could that mean the economy collapses, etc.? Well, we're going to have to wait and see. High time frame bias. So start with daily and the 4-hour trend. So trade only in the direction of high time frame bias. Okay? Lower time frame is for entries only. So let's break this down. I always mention to look for your major support levels on the daily or weekly time frames while your indicators are in confluence. So if you start with the daily, okay, let's say the daily RSI is oversold. So you're trading only in the direction of the high time frame bias. And so you're looking for trades, looking for longs because your RSI is oversold. Now you go to the lower time frame, which is for entries only. So then you look at the 4-hour and you're like, okay, the 4-hour is still a little overbought. I'm going to wait till it comes back down. So you're waiting for the 4-hour to line up with your higher time frame bias. Once the 4-hour starts to get oversold, boom, there's your signal. You can enter on that. You see what I'm saying? Versus entering because the daily is oversold, but the 4-hour is still nearly overbought. And now we pull back and you weren't patient enough. Therefore, you didn't get the best entry you could. So that's why you use your lower time frames for entries only, and your higher time frame is your bias. So entries that work, I mentioned liquidity sweep plus structure reclaim. So if we sweep those lows below support and then we reclaim that support, then there you go. That's confirmation. A long is probably a good way to go. And avoid middle of the range trades. So guys, if we're trading in the middle of a range, kind of like we are right now around 88K, then just be patient. Wait for it to come down to 86K or wait for it to come to resistance here 90 to 91. That's when you can put your trade on. But trading in the middle of a range is going to be the quickest way to lose money. Exits and trade management. So partial profits reduce stress. This is why I always preach take profits along the way and why we have 3 take profit levels in our trades. Now, also a good rule of thumb to have is moving your stop to break even whenever you hit TP1. So say you hit your first take profit, move that stop loss to break even. That way, if price comes back down, well, you've locked in profits, no stress. So never turn that trade into a hope position, okay? So just because you got a good entry doesn't mean that you tick the bottom and now it's up only from here. The market's very volatile. There's a lot of swings. And so Don't think that your entry on Bitcoin at 84K is the Pico bottom and now we're going to Valhalla afterwards. No. Take profits along the way, play it level by level. Psychology in 2026. Okay, FOMO is designed into the market, as you guys know. There's a lot of FOMO created with a lot of tokens this year. So less screen time is going to equal better trades. And I know this seems like a paradox to you guys. What do you mean less screen time equals better trades? I thought if I spend more screen time, I'll be better. Well, it's all based on focus. Focus is a superpower. So what do I mean by that? Well, I mean that 2 hours of focus on the screen is better than 12 hours of distracted focus, okay? Or of distractions. So I'll say that again. 2 hours of focus is better than 12 hours of distractions with distractions. And so if you're spending 2 hours and you're focused on the charts, you're looking at all the setups, you're looking at your indicators, you're journaling, you're writing down your thesis, etc., you're ready for that trade. That's going to be much better than if you spend 12 hours on the screen and you're spending, 5-10 minutes looking at the chart, then you go to TikTok, then you watch YouTube videos, then you look at the chart again for 10 minutes, then you go on YouTube again, then you look at the chart again, and then, oh, I see an opportunity. I see this coin pumping. Okay, I'm going to buy it real quick. Well, when you bought that token, did you wait to see why it's pumping? Did you draw your levels on that chart? Or did you just buy it because you saw it going up? Do you have a plan in place? Or were you distracted by looking at TikTok, Instagram, and YouTube, and then you just saw something and you spent maybe 5 minutes looking at it and then you got in? You see what I'm saying? Because if you're distracted, then you're acting on emotions versus if you're focused, you're acting on the data. That's the difference. So 2 hours of intense focus is better than 12 hours on the screen with distractions. So remember that. Journaling is also a non-negotiable. Journal your trades. I don't care if it's if you're boring, if it's hard, do it anyway. Journal how much sleep you got, what you ate. Did you work out? If you lost the trade, why'd you lose? Did you chart it? Were you acting emotionally? Did you FOMO? Or did you have your levels drawn perfectly and it's just part of the statistical probabilities of X amount of trades are going to be lost regardless, right? Was there any lessons to be learned? That's why journaling is very important. Everyone should do it. Buy a 99-cent notebook and just journal. I promise you it's going to pay off in the long term. Tazuli says, are there any other platforms than CoinGlass where we can get liquidity, heat maps, etc., the 1 hour? I'm sure there are, definitely. I don't know if CryptoQuant has it, but yeah, CoinGlass is the best one. You can look on Google and see, or even ask ChatGPT. But right now, CoinGlass is just the main one I look at. And I wouldn't go any less than 24 hour, because if you go to 1 hour, it's just, the liquidity levels are always changing, right? And so there's going to be much more volatility with a 1 hour, and liquidity levels can't really be trusted because there's always people putting limit orders in, taking them out, etc. So I would not trust that too much if it's lower than 24 hour. Austin says, CD, do you use the same leverage for every trade you take, or does it vary for you? If it does, what's your thought process on deciding? Great question, Austin. So I do use different leverage amounts depending on what token I'm trading, for example, and depending on the conviction a little bit. But for example, Bitcoin's not as volatile, right? It usually moves a couple percent at a time. So if you trade 5x leverage on Bitcoin, you could still do good, right? You could still make some profits, but 5x leverage on a 2% move for Bitcoin, you're earning 10%. Okay, 3% move, yeah, you're earning 15%. It's not bad. But with that said, I'd rather trade Bitcoin near maybe 7 to 10x leverage, so that if Bitcoin has that 2% move, okay, I'm locked in 20% profits, right, on that 10x leverage. Whereas, let's say, for example, Ethereum or Solana, which are a little more volatile, which those move maybe 3 to 4%, then in that case, okay, good, 5x leverage is fine. So it just depends on the volatility of the token I'm trading. So if I'm trading even something more volatile, let's just throw a random coin out there. Let's say I'm trading Brett, okay? Brett's a meme coin. But that thing can definitely move more than 3 to 4%, probably moving 5 or 10%. Well, at that point, okay, I'm going to trade maybe 2 to 3x leverage on a meme coin. You see what I'm saying? Like, depending how volatile a token is, that is the leverage I'm going to use. And also, like I said, how much I'm willing to lose for stop loss as well. Like, for example, if Bitcoin's near major support and a 4-hour close below it is going to invalidate it, and maybe that 4-hour close below is like 1.5% away, then okay, maybe I may do like a 12x leverage or something, or higher, right? But again, it just depends on where my stop loss is at, as well as how volatile that token is. All right, common ways traders lose. over trading, revenge trading, and ignoring macro context. So over trading, we've all been there. We get bored. We're like, man, I haven't traded in a week. I feel like I'm falling behind. I feel like I'm missing all these opportunities. Well, what did we say in the beginning? We said there's opportunities every day. If you miss one, fine. But it's better to miss a good trade than to take a bad trade. I'll say that again. It's better to miss a good trade than to take a bad trade. So I actually need to write that down. That's a pretty good one. Hold on. Let me write that down so you guys know it as well. There you go. Okay. Because the truth of the matter is, guys, you're going to miss trades every day. But are you FOMOing in and just trying to catch a trade because you're bored? Or are you being patient and waiting? They say patience is a virtue for a reason because not many people have it. And so focus on those tier 1 setups and just know that you're going to have opportunities every day and you're going to miss opportunities as well. But it's about the trades that you take successfully, not how many trades you take. And then revenge trading. A lot of people will happen if they get into that emotional spiral. They'll look at a token that's rising quickly and they'll FOMO in, only to then realize that they become exit liquidity and the token dumps immediately after. Well, because they're so emotionally involved, you could say, then what's going to happen is they're going to sell that token out of fear, lose 50%, and then they're going to revenge trade and either A, try to bet double on the next one, or just try to find any token that's pumping and try to catch that, right? Or if they're leverage trading, they're going to try to double their leverage and try to make up for it. Well, that's the quickest way to blow up your accounts, quickest way to lose more money. Guys, if you find yourself emotionally compromised in a trade and you FOMO'd in and now you lost a lot of money, I'm telling you right now, the best thing you can do is just step away from the charts. Step away from the screen, touch some grass, cool your head, journal why you lost money, what was your emotional state at the time, and be patient again and wait. And I'm telling you, it's not easy to do that. When you're emotionally involved, it's not easy to be patient and not take another trade after that. But that's going to save you so much more money in the long term versus trying to make up for that trade and losing even more and spiraling even further. And then ignoring macro context. So if there's a lot of negative news coming out, but there's a lot of negative catalysts ahead, the worst thing you can do is try to long into that, okay, and ignore it. So what I mean by that is if there is, say, a potential war that's going to happen, there's a potential trade war on the horizon, well, you're probably better off taking a risk-off approach and waiting if you're looking for longs. And so the best thing you can do is wait, or say there's a lot of bullishness ahead, right? Okay, the Fed looks like it's probably going to cut rates. Okay, there's a lot of, looks like there's some good negotiations going on. Okay, I think I'm going to try to front run this. Then you can do that, right? You can be more of a long biased view in that. But you need to take the macro context into effect, quantitative easing, interest rate cuts, everything. Tools serious traders use, TradingView for structure and execution. I love to use TradingView. There's so many free indicators, so many useful indicators on it, so easy to use. Yes, BloFin has charting platforms as well, but TradingView, in my opinion, is just so much more intuitive and useful. And you can also use on-chain data for confirmation. So things like CryptoQuant, CoinGlass, Farside for ETF flows. I mean, there's so many different on-chain data things you can use that's going to help increase your edge in the market. And then last here is journaling to track performance. Again, everyone needs to journal. I don't care if it's boring. I don't care if you don't want to. Everyone needs to do it. And I promise you over time, you'll build a habit of it and you will learn from your trades. And the professional mindset. So trading is like a business. You need to treat it like one. Losses are operating expenses. What does that mean? Well, operating expenses are unavoidable. Okay. Just like with trading, there's going to be losses. Just like with a business, you're going to have overhead. You're going to pay your employees. You're going to have marketing expenses, etc. They're unavoidable if you want to grow. And so with trading, you need to learn how to take losses and know that the process is greater than the outcome. Okay. It's not about how much you make. It's about how much you keep. You're playing the long game here. You're not trying to catch the 100x. You're trying to catch those 10, 20% moves over time. You're trying to be consistent and disciplined. And that is going to be so much greater than trying to catch that one big move. So final rules to survive 2026, protect your capital first. I'll say it again. It's not about how much you make, it's about how much you keep. Trade less, but trade better. Just because you take more trades doesn't mean you're a better trader. It's about risk reward, it's about statistics and probabilities. Only trade when you have those tier 1 setups. Major support on the daily or weekly time frames while your indicators are oversold and in confluence, or if you're taking a short, you're at major resistance on the daily or weekly time frame while your indicators are overbought. You see that? And you need to also look at the macro factors as well. But it's about having those tier 1 setups and being patient in the meantime. And you need to stay adaptable or get left behind. Narratives are going to shift. I guarantee you the narratives that we have this year aren't going to be the same narratives next year. There's going to be a lot of other factors at play. The macro environment is going to change. There's going to be many more things that you have to take into account. Okay. I guarantee even I can't predict what's going to happen in 2026. But the thing is, I will be able to adapt. Say we're in a full-on bear market. Okay, I'll adapt to shorting more. Or say we're trading to a more bull market because there's a lot of potential catalysts. Maybe QE started. Okay, cool. I'll start longing more. Right. But the thing is, you need to be able to adapt regardless of how the market is, depending on what it's showing you. So that's the biggest thing. The sooner you can do that, and the sooner you can take these principles and take these points into account and actually implement them with the journaling, with the leverage, with adapting, with being able to manage your emotions, then the sooner you will be a successful trader. So no problem, Austin. Glad that helped you out. Sniffed, it says, which trading view plan do you use? I use the premium one. So I use the premium. I think the Black Friday deal had it at around $299 per year. I think originally it's like $500 or $600 per year. But that's the one I use because I use a lot of indicators. So I think you can have 20 plus indicators on it. But for most people, I think you're fine with a pro plan. I think that gives maybe 10 indicators. And so even the free plan, I think you get what, 2 to 3 indicators. That should be fine for most people. But again, it just depends on what kind of trader you are and how much analysis you do. David says, which indicators are your go-to on TradingView? My go-to, David, is going to be the RSI, the stochastic RSI, the 50 and 200 EMA, and then standard support and resistance lines that I draw and trend lines. And so really, I'll repeat that again. The RSI, the relative strength index, the stochastic RSI, and the 50 and 200 EMA. Those are the indicators. And then I do standard support, resistance, and trend lines. Now, of course, I have my custom indicators, but if we're just keeping the basics, you're fine with the aforementioned ones. Lucario says, how can we know the live streams in advance? Trying to build a schedule to stay up to date. So Lucario, honestly, the live streams are more fluid during the holidays. And so I don't want to tell you a stuck time, but I will say this. I will say you can usually expect these live streams Sunday and Monday at 1 p.m. Central Standard Time or 12 p.m. Central Standard Time for the paid group. So I have these in the paid group at 12 p.m. CST Sunday and Monday. Then the free group, I usually have them at 1 p.m. CST Sunday and Monday. So today was a little bit later because the holidays, I just got back, getting my sleep schedule right, all that stuff, right? But usually you can expect it around 1 p.m. Central Standard Time, Sunday and Monday. Sunday is going to be the weekly market overview. Monday is going to be a lesson, whether it's how to take profit, how to trade, how to chart, whatever it is, just whatever I think about that people need to learn, we're going to focus on that topic. Eric says, you think NQ topped? It's possible. I think the S&P probably can go to 7,000. I think that we'll see maybe a little bit higher, but there's definitely going to be some profit taking because think about it, guys. At the end of the year, you have profit taking, you have tax loss harvesting before taxes next year, right? So that's why you have a lot of selling around this time, either in December or in the beginning of January. There's a lot of tax loss harvesting during that time. So just something to keep in mind. But I do think potentially the stock market will have a pullback and then we'll need to adjust from there. No problem, David. Glad it helped. Cool. Give another 30 seconds if any of you guys have any other questions. But again, this stream was to teach you guys how to prepare for 2026 and how the market is always evolving, how narratives are always evolving, and how you need to evolve as a trader. Because if you stay the same and use the same strategies that you used in the last cycle, you're going to lose because the market changes. Like I said, the hodl mentality doesn't work this cycle. If you hold a token, more times than not, you're probably down 80 to 90% from the highs just because most altcoins have just bled. And it's horrible, right? Like it's frustrating. But again, we're in a very rotation heavy market, so you need to adapt accordingly. Snifted says, thanks for the stream. Have a great day. Night. Hey, appreciate that, Snifted. You as well. Eric says, are you still taking the possibility of a bear market? Yes, I am. Yes, I am. Absolutely. Because again, we have to be realistic with ourselves. And if October followed the 4-year cycle, like nothing changed, right? And so if we topped out in October, then we have to have that bearish bias. And that's why I'm so adamant about taking profits along the way. Austin, thanks, CD. A lot of great things you said there. Hey, no problem, Austin. No problem. And for my view of Q1 of 2026, I am tentatively bullish because the market, the Fed, is having those treasury buybacks, 40 billion worth over the next 20 days, then potentially continuing that over the next few months. Then they may even start monetary easing with actual quantitative easing, right? Monetary stimulus. And so that could happen. They're not cutting rates in January. I think the chance of a no change is 87% on poly market, so that's not going to happen. But they may cut rates in February or March, which could be another catalyst. And then Trump's talking about stimulus, tax refunds, all that stuff next year as well. So, and also you have Jerome Powell being replaced in May of next year. So whoever Trump brings on as new Fed chair, they're going to cut rates as much as he wants. They're going to print as much money as he wants. And so with midterms in November of next year, expect the market to do fairly well. But again, there's going to be a lot of volatility in between that, but I do expect Q1 to be bullish. Maybe a little pullback beginning of January, and then using those dips to buy maybe 70 to 73K for Bitcoin. So just be okay mentally with Bitcoin getting that low, even 65K, right? Just mentally be okay with us dropping that low. And if you are, then you can manage your risk and your portfolio accordingly. Eric says, this year we had more red months than green. Yeah, it was horrible. It was definitely a horrible year. But again, I think everyone here learned and grew as a trader, and they can use that going into 2026 and being that much more successful. So awesome, Bray, no problem. Glad you guys had a great time and you enjoyed the stream. I appreciate it, and I enjoyed presenting it to you. And hopefully you guys have a great rest of the day, have a great rest of the week, holiday season, new year, everything. If you want to watch the stream again, it's going to be uploaded to the Jim Hunter's YouTube channel. So you can expect that to come online about 30 minutes after the stream ends. So definitely, guys, thank you so much for watching. Love you guys. Please like the stream if you haven't. Until next time, talk to you guys soon. See ya.